All right, there we are. What's up, guys? How is everyone doing tonight? I hope you guys had a great day. All right, we're good. I can see it over here. We're good. Let's not bring that up. How you guys doing? How's everybody doing tonight? What a day in the markets it was. Huge week coming up. So you guys better get your sleep tonight. All right, better get your sleep. Let me make sure that everything is good. So listen, you guys want to do something cool? You guys want to know how much time we don't have? Set up a live and think you have everything ready to go. And then you got 6 minutes. Yeah, I'm good. And you start thinking of every other thing under the sun and you just don't have time. So we give a couple minutes for everybody to get on, you know. So what's up, Matt? How you doing, bro? I hope you're doing good tonight. Hope everything was good today. You didn't try to do too much, do too little, you know, because it's a big day, or it's a big week. It's a big week, gang. Shit, man. So anybody here, guys, thank you for joining. If you could, like, share, subscribe. I come on here in the afternoon, at nighttime around 8:30, maybe sometimes 9:30. We're live Monday through Friday, 7:30 a.m. to 4 when the bell closes. So today, I already came in the day. I was exhausted. We have a lot of family stuff going on, as you guys know. You know, things happen. You trade when you can, not when you want. So I already came in, and I had said, what have I said for the past week or the weekend ending last week? Excuse me. I said we could start to see positioning for CPI tomorrow. I said, watch, you could get a dull day. You might get a half of 1%. You know, the S&Ps, I think we actually closed in about, if I had to take a guess before I pull it up, I'm going to say probably just under 1%. It wasn't too bad of a day. And we have 0.9%. I thought it was going to be around 0.8%, 8 cents of a percent, but again, it was just under 1%. So there's a lot that I want to go into with this. So Friday, I said that we could break 430. We broke 430. You didn't close above 430. You closed, 10 cents underneath. You know, same. You know, same difference. All right. So I've been preaching like a lot of things on here. I've been preaching a lot of things. And for anybody, whether you're new, whether you've been trading for a while, again, I've created this so you have a place to go to. And you don't have to spend a whole lot of money to be able to have a place to go to, whether it's for trade ideas, information, charts, just, you know, having a support group. And I hope to grow this channel. And my ultimate goal is to be able to have a place where individuals can go that don't have to pay an astronomical amount just to join a trading group, that you end up paying for it. They suck you in, and your returns or your expectations, because of the unknown, it's part of the sales. Your expectations are unknown. So they make it seem like everything is great. You join and you're like, yeah, you know what? It probably wasn't for me. So there's ways we can do this for free. And I hope to actually be able to bring a couple more people on. And I have a couple ways in my mind how we're going to do that on YouTube. All right. Well, there's a will, there's a way. If you build it, they will come. All right. So let's get into the spot. Let's go over into the overall indexes, guys. We, again, as everybody knows, if you're living under a rock, we got CPI data tomorrow. Again, if you could, like, share, and subscribe. I got some really good information for you. You need to read the sentiment. All right. What happened? Let's go back. All right. Let's go back. We come out of 2022. The end of 2022, everybody, the story was, it sounded great. It sounded good. We'll get we'll get inflation under control. Then we'll worry about a recession. All right. Sounds good. Sounds good. You know, you start to recover with inflation, and then the markets start to worry about recession. Well, guess what? Since the first of the year, we have done nothing but rally. All right. I have a couple of different ways, and I'm going to go with this. I'm going to make this quick. All right. So knowing that is the story that everyone from money managers, CNBC, online, wherever you get your information from, or you do your research, and you should. I'm not a financial advisor. You need to do your own research. Everyone was on the same side. Okay, that alone, and knowing that the market's probably going to do the opposite. Okay, it's peak pessimism or peak pessimist, whatever the word is. Usually, pessimism is for the upside or the downside, and then everybody's trying to go short, and then the market's reversed because, again, the market is 80% psychology. You do need a 20% education. It's so important. All right, we're going to offer that to you. We have been spot on the past 2-3 weeks with our, just not only with our trades, but as far as putting ourselves in the right part of the market at the right time. All right. Last night we had a great live stream. If you haven't watched that one, go back and watch it. Even towards the end, like I like to take questions. I like to help people out that may not know whether it's patterns or like different definitions of things, whatever I can do to help. So what I'm getting at is you've had the market rally the whole first half of the year. So with that being said, it's going to lead me into a chart that I continue to go back on. All right. So tomorrow we have inflation data. We have CPI. We also are going to get, is it not tomorrow? I think it's the same day. So we're also, if you don't know this, and it's very important, again, I preach it, we have PPI Wednesday morning. So, okay, so it's on Thursday. The EU, or I should just say the EU, European Union, it's not the European, Europe's interest rate decision is also on Thursday, so it's a day after Powell's. Christine Lagarde has also been saying that they want to raise rates. What do I think Powell's going to do tomorrow? I think Powell, so if you don't know, the Fed will be meeting tomorrow into Wednesday morning to discuss the rate hike decision. All right? They're going to look at this data. They're going to look at CPI. They're going to want to know what CPI is. So CPI has been coming down. CPI has actually been coming down month over month, roughly around 3% from October, November. All right, we had a lot of ups and downs, and actually the ups and downs that were causing where we hit our 9 handles on CPI and 8 handles. Our first 8 handle, I'm pretty sure it was an 8 handle. It may have been 8.5, 8.7, but that was in June of last year. The definition of inflation is the rate of change. All right. We pretty much hit peak inflation last June. And I said this last year that coming into now, we should definitely, as long as prices stay the same, our prints should be coming in pretty damn low. All right. And then you had a July reading, which was just under. It wasn't under expectations, but it wasn't near. It was like 8.1, 7.8. And then it was either September or August where you hit the max. It was a 9 handle. All right. So coming in, we were already expecting that this data should be pretty good. You've had SVB, you've had the regional banks come down. That's also a deflationary event. All right. The banks are starting their tightening. They're starting to tighten up on lending. Are you getting all these things? All right. So tomorrow, the Fed is going to be watching CPI. Do they rely on CPI? They don't. All right, what the Fed looks at is PCE numbers. All right, we're going to get not only rate hike decision, I'm looking for the Fed balance sheet. We still have not had any, guidance or inclination on where the Fed wants to be, by when. We don't have any insight on the Fed's balance sheet, this balance sheet runoff. That's also a major factor, and you're starting to see it because that is liquidity. That is the liquidity, again, if you don't know. So the Fed will go and buy bonds. They will buy mortgage-backed securities, municipals. They will buy all kinds of things. They'll buy whatever security that they can get their hands on that they deem reasonable. So let's just say they buy a bond, okay? I'm the bond holder. I sell the bond to the Fed. So in part, I give them a bond. They give me cash. Well, cash is inflationary. I'm not going to hold that cash. I'm going to take that cash and I'm going to put it in the stock market. I'm going to buy more bonds. I'm going to buy maybe a different like a longer term bond, shorter term bond, because rates are coming up. So what this balance sheet runoff is the Fed is not selling them and selling them at a loss. Now they've added a little bit more because they had backstopped this issues with the regional banks. They said, you guys, because what nobody's talking about is back in 2018, they had pretty much gave them a guideline on what they were going to do. So the banks went about it and nobody knew about COVID. So you went from one extreme to the other. You went from 5% down to 0.8%, damn near 0% interest rates, damn near 0% Fed funds rate. Okay. And then we go to 0 to 5 in a year, So that's one extreme to the other. The banks weren't prepared. You start bringing interest rates up to 5%, money market accounts start paying a decent yield, that which in turn the depositors that are looking for a return on their savings, an interest payment of sorts, especially individuals that have companies or businesses, big money wants that, because a lot of companies also use bonds as a way to pay payroll. A lot of people don't know that, but that's big companies. That's few. That's few and far between. It's not important. But you get to a 5 handle, that's free. That's almost free money. That's about as risk-free money as you can get. They're going to take that money out of the deposits and put it in money market accounts. So in turn, that money leaves the bank. The bank gets scared. They're like, okay, we need to worry about liquidity. That's liquidity in and of itself is money. And how much do you have versus how much are you margined? Like how much money do you have coming in? How much do you have leaving? And how much do you owe in between all that? Okay. So what happens is if enough money leaves, the banks have to find the money somewhere. So if they lend, they also go purchase bonds. They lend on short-term rates and they borrow on long-term rates. Okay, so what that means is they borrow on short-term rates, they lend on long-term rates, because technically your longer-term rates are supposed to pay more because of time, uncertainty. We'll just say time, because there is risk, because there's the unknown of what's going to happen 10, 15, 20 years from now. You kind of can't forecast that, but you also want to be paid for your time. So what happens is the banks, what happens is with your bond ticket, okay? On your bond ticket, as interest rates go up, the price of that bond ticket comes down. And as the interest rates come down, the price of that bond ticket goes up. So what happens is if these banks have to sell their bonds at market value, at market to market, they will be selling them at a loss. Okay? So what the Fed did was they stepped in and said, listen, we are going to take your bonds. We'll give you the full amount. So they take the bonds and they just hold them. Maturity comes, they mature, they either reinvest it or they don't. So this is the Fed funds. Well, I don't have the Fed funds balance sheet up because we've already went over that. We know what it is. It's around 8 trillion. It's like $7.8 trillion, maybe a little over 8 trillion. So where does the Fed want to go with their balance sheet? That's one I want to know. We're going to get that Wednesday. What, are we going to get 25? Are they going to pause and then do it? I'm almost certain that the Fed, they've already said that they do not want to pause and have to raise again, pause, rate again, pause, rate again, because they did that in the 70s and it didn't work. It just kept inflation there and it kept it around. But I think we're in a different time. I kind of feel like it would help. It's not going to help some people. It's going to hurt some. But again, you got to think about the people that are in fixed income. I mean, as long as prices aren't going up, the Fed's not worried about it because they're worried about two things: maximum employment and price stability. Okay. So this inflation data, they're going to see if we get a decent handle on this core inflation reading month over month. And you're not necessarily worried about year over year because we're only in the second year. So they're not going to worry about year over year until maybe 3 or 4 years down the road. All right. We know it's coming down month over month. That means it should in turn, bring year over year down as we go. So if we come in line, good, great, grand, the market may rally. But again, like I'm saying, the Fed's going to look at this, but you need to know that what they look at is PCE. All right, PCE is what the Fed uses. PCE will be in the summary of economic projections. You're going to get that. You get that every quarter. You get it every 3 quarters, and then you get the year end. So we're going to get a lot of things this week. Okay, the market I went over this last night. Do they raise the year end target for the Fed funds rate? Right now it was at 5.1%. Now, if I bring up the Fed funds rate, it may change. It may be down, it may be up. But from the last summary of economic projections, it was December 2023 median projection was at 5%, 5.1. So that could mean 5.25 on the high end, 5.5, maybe 5.75 on the low end, 4.8, 4.5 roughly. So, but the median is 5%, 5.1. All right, we got that out of the way. So you want to watch your CPI reading tomorrow. Now, what you need to know about the CPI is what is CPI? CPI is Consumer Price Index. Okay, you have Consumer Price Index. You have CPI core, which is right here, core inflation rate, and then you have your regular inflation rate. Okay, the difference is one has everything but food and energy, and then the other one includes food and energy. All right, so this is services you pay for: healthcare, insurance, automobiles, houses, apartment rent, anything you can think of. All right, other than food and energy. So it could be, like I said, insurance. You call somebody, you call a plumber, electrician. So that is what this is. This is what we pay for services. All right, so I am expecting we do not get a crazy number that's off the handle. So I think we come in just under or in line. Okay, the analysts that do this, the economists that do this, just a few months ago started getting it about right. Now, do they cook the numbers, do this and that? They could. We don't know that. That's a whole nother story. Just like the employment data that we had last week didn't make sense at all. Okay, so we have that. All right, now what I'm getting to is I said last night, I said Friday, I've been stating that you could see positioning before CPI. What does that mean? That means that institutional holders or even retail are going to position themselves for a good number or a bad number and a pause. And you've seen on the S&Ps today what happened. All right, we bounced around, we found support, and what'd you do? All the way up into the close, you rallied. You held 430, 430.50. Look at that, pre-market lows. All right. Now, if you're on the live stream today, we're live Monday through Friday, 7:30 a.m. to 4 p.m., a little bit after the bell. I had a storm right about here. We had a storm, so I cut the live stream off. And I wasn't even worried about trading today. I did make a trade. We'll go over it. It was a really small one just to get prepared for tomorrow. I seen it. I made it, and I took my profits. It was nothing to even talk about, but I will. Again, we have CPI tomorrow morning. What do I want to go over? All right, I want you guys to see this. Okay, this gets me back to what I was trying to get into. The sentiment. Okay, again, the end of the year, coming to the end of the year, everybody was projecting one thing. The market did completely opposite. Now, again, everybody has changed and they're saying end of year. Okay, end of year. Why is this important? Okay, listen, because today specifically, you had everybody talk about where's the recession? We're not going to have one. Soft landing. Is Powell and the Federal Reserve going to have a soft landing or hard landing? What's it going to be? Listen, you guys, it's right here. It's right here. Okay, give it time. This is the sentiment. So just beware. We go on and we rally. Okay, I got two things. This is the first part of the second that I'm going to get into. All right. Again, I've brought this up before. What do we have? Where is the interest rate? Okay, first off, the Fed funds rate is right here in blue. Unemployment is in red. All right. July 2015, they took this about 5 years to come up. Peak. There's your peak rates, okay? Peak rates is where they paused and either like just kept it there and then it came down. It doesn't matter. Where was peak rates? Peak rates was right here. Yes, we had COVID, okay? January 2019, and this is right on par. What do you have in unemployment? January 2020, it makes perfect sense because of COVID. Boom, there was your employment print start to tick up. What do we have here? We are September 2006. Sorry, I have a laser mouse, so it's really touchy. September 26, peak rates. Okay, this is where they paused. All right, peak rates. August 2006. There is the uptick. Right here is really where it goes, but you started to have the uptick here. December 2007. Let's go back to 2000. Peak rates, roughly June of 2000. Where did unemployment pick up? January of 2001. Let's do this one more time. In the 80s. Peak rates, April 1989. Unemployment tick, July, call it August, July, uptick in unemployment of 1990. Okay, again, that's 1989 of April. You come in, boom, you get your uptick. July 1999, your uptick in unemployment. All right, and it goes on. This isn't the first time. You have it here. So what I'm getting at is from peak, okay, if they pause or if they give 25, okay, we'll call it, if we don't get an interest rate hike on Wednesday, it'll be March. So you want to take March and give it at least 10 to 15, we'll call it 18, but just give it at least a year. All right? Give it at least a year from peak rates. Even if they start lowering, that is when you're going to want to worry about a recession. Okay, because then that has given the interest rates time to filter through the system. We just started it. I know it seems crazy. Like, I know why people are talking about it. It's because we have went from 0 to 5 practically in a year. This is the fastest they've done it in 30, 40, 50 years, if not longer. Okay. So this is what nobody is talking about. Right here, they're not putting the pieces together. They're not going in and saying, well, where's unemployment? Where was the Fed funds rate? I could also do what I was going to do, but I don't want to take too much time. Maybe I'll do it tomorrow before the interest rate hike. I'm going to bring up the Fed funds rate, and then I'm going to tie it to GDP. And then we're going to see the GDP, because that's where we're going to get GDP, and unemployment is where the next leg to the downside could be. All right, so I need you guys to know, if you guys are out looking at a bunch of things and everything, like, just know you're going to see this. If you just turn on CNBC, this is what they're going to be talking about. Bloomberg, they're going to be talking about this. Soft landing, they've made it. They're good. No recession, we made it out alive. No, give it time. From peak, all right? The data's right here. All right, St. Louis Fed, Fred.com, Fred.com. You can make whatever you want. All right, you can put in whatever data you want. They have everything, anything and everything, and it goes back a long ways. All right, so that is sentiment, and sentiment is so important because the market knows this. Like, the market's not stupid. A lot of these money managers are not stupid. They know what the hell they're doing. They've been to schooling. They've been to the best schools on economics. Okay. Now, again, when it comes to trading and doing things like that, yes, they have different departments of different things. They have your automotive, they have technology, what's like semiconductors or insurance, construction, so each person plays a role. Biotechs, so because they don't know it all, but they bring in like somebody that knows and went to school for healthcare, biotechs or whatever, and that person will be able to tell them, what does this data mean? What is this? Is this going to make it to the FDA approval? Is it going to get past the third stage and make it to the FDA approval? Like, to somebody that knows what they're doing to read the data. Like, they have the money to spend. They do hire those people. So again, this is the sentiment right now. Everybody's talking about a recession that isn't here. Well, they haven't given it enough time. So if we get a pause, take it from March, or from last month, or May. I'm sorry. So take it from May, because that was our last rate hike. 2 is very important. Again, we're going to get the summary of economic projections. If you guys need me to, I can go over it and just show you it. As soon as you go to the Fed site and pull it up, it'll be the first box, and that first box at the bottom is where the Fed funds rate year-end target is. Because when we get CPI, or when we get at 2 o'clock the Feds, when they release their decision, they have computers that scan it, and you're going to see the market move literally like that. It scans it quicker than you can blink, and they know where it's at on the sheet. Like I'm telling you, I know where it's at. I know where it's at. I know the type of words that they're going to look for, and that is going to, dictate what we're going to do. We don't know. I think we're going to pause. I think they might pause, but part of me is like they may not want to pause and just let's do the 25. Things are pretty hot right now. The jobs data can handle it. We'll put on the 25 because worst case scenario, we can cut rates if we need to. All right. And they've said that. They've said that this whole time. They haven't said it lately because they've been a little more dovish the past 3-4 months, 5 months. But last summer, they were talking about Paul Volcker. Like, that's completely changed. Paul Volcker is up here. This is Paul Volcker for you guys. He said, I'm going to shut inflation down. I'm going to get it out of the way. And then what do you have? You've had 15, 30 years of growth. You had 2000 bust and 2008 great financial crisis, but those actually help to continue a 10, 15 year expansion. All right. These things are needed because when there's no buyer to step in for your home, things can get bad and ugly. So they do it in moderation so that things can operate as they should. All right. So keep your eye on that. Just know that from peak rates that it needs time to filter through the system. Okay. We will see an uptick in unemployment. We will see a mild recession. Okay. There's no way around it. There's no way that you go from not only 0 to 5 in a year, but you don't get these interest rates. There's never been a recession without one. All right. You will. Whether it's a mild one, I'm not saying we're going to get this huge recession. Watch out. Okay. But it will be a mild one, and it can be felt in different categories. Like if you're in real estate right now, you're probably feeling it depending on your location. Okay, it also depends on location and like how you go about things. Like Ben Malla, he's a real estate guy. He's not a real estate agent, but he has his own properties. Okay, and he's feeling it because the cap rates are not matching up with the interest rates when he goes to borrow from the bank. If the cap rate's 5 and the interest rate's 5, he's not making any money. He's actually losing money. Because he's got to pay interest on that after 2 years, or even on that, whatever he decides. They can work things out all kinds of different ways. Or let's say the cap rate is 6, because what it is they're looking for their percentage on their return. They can charge Starbucks, Publix, all this stuff, and what they do is they charge them to pay the rent, the insurance, and the taxes. So they have to worry about the roof, the driveway. He obviously may have insurance. I don't do real estate. I don't know anything about it, but I do know the basics. And that's what it is. They want their return. What is the return? They put up $1 million. They get 6% on $1 million, $2, 3, 4, 5, $10 million at 6%. That's their income on that one property. That's what they're looking for. They're not trying to they've built a portfolio and they can rely on a percentage of, like I said, 6, 7, 8. But when your cap rate is 6 or 7 and your interest rate's 5, like you're 2.5%, and it's probably not a good deal. So that's what I noticed today. I wanted to point that out too. This is the big one. This is the big one, gang. All right. This is the big one. So we have, and I have a lot of it written down. I don't want to forget about it. I'm going to get into the Fed meeting more tomorrow about, you need to read Jerome Powell. What's his demeanor? What's the paper say? And what does he come out like? What's he like? What's his attitude like? Is he dovish? Is he hawkish? It takes time to know how to do these things. I have a playbook for every Fed meeting that I've pretty much been in that's meant something. Because a lot of Fed meetings don't mean anything, but they do now because of the environment we're in. So here we have the S&P. So what happened last year? You had equities and bonds both underperform. your 60-40 didn't work. You lost money if you had a 60-40. Okay, a lot of institutional investors through this whole time, this whole year from 2021 or 2022, they lagged the market. They did not do well. Okay. Coming in, like I said, coming into this year, they expected the first half of this year to be a down year. Like we should have started to see the recession. No. Well, we didn't. All right. There's not enough time there. There's not enough time for that. I just showed you 4 different data points in time that tell you, yeah, you need more time. It's from peak rates to, and the other from '08, I think they did it in like 2 years. So you guys got to give it time. There will be a minor recession. All right. So, and getting back to that, the reason why it happens is because it spurs lending. Okay, it spurs lending, and lending is new money. All right, it goes. There's so many ways that it affects different markets. Okay, maybe it's a construction business that goes to the bank and they get all their material and get all this stuff for it, and then they get their check and then they pay it off. Like there's just all kinds of ways that it works. All right, so again, we had an underperformance in both bonds and stocks last year. Okay. You had the market rally because a lot of the sentiment was we were supposed to have another down year, so they positioned themselves for it. And net book is still really short. I'm thinking this rally could continue, and you might be able to get to my targets here a whole lot sooner. Okay, I didn't measure these at all. I kind of just instinctively put them there. I'm just gonna leave them there and see what happens. But what does that mean? You could have institutional investors start to worry about their business. They may have to join this rally whether they want to or not. All right, because the majority of them are still underperforming. Going on a year and a half now, you're coming into the second year of underperformance. They're going to take their money elsewhere. Okay, so they may have to join. What have we seen? We have seen analysts continuously raise price targets because they don't want to miss this. If the analysts are raising price targets, you need to know because the stock is probably going to go up. Now, if they cut their price targets, that's a different story. You might want to be short, depending on who it is, who is the analyst. Like, who's it coming from? Is it Morningstar? Is it like just some Joe Schmo? Like, all right, so that's another thing that I realized like today that I've picked up. Like, this is all sentiment that you may hear or it goes through you like you're throughout your trading day and you just don't pay attention to it. Okay, it's important because it's sentiment. You could get peak pessimism up here where everybody tries to get long and then the market reverse and pull back. Could happen. But for right now, I think there is too many. Okay, the net book short long means you are short long. That means you think the market is going to go down longer term. Okay, and you position that way, whether you're short to like 2025 or 2024, all right, and you've paid the margins, like the fees, and as it keeps going up, you're going to get margin called. They're going to get margin called. They got to come up with capital. When do they cut the position? When do they manage that risk? That means they have to buy it back. Okay, and then they also have to the majority of them have to get net long. A lot of them are not net long yet. So again, you've underperformed here. You've had an underperformance this first half of the year. That could bring a pretty big rally that we still haven't seen yet. And the fact that it's up like it is, people are going to say, I don't want to buy here. We go 2-3 weeks on, and guess what? The market is up at 450 before you can blink, and you're like, damn, how did I not get long that? Well, because you saw the market going up, and you're like, I got to wait for a pullback. Well, listen, don't fight the trend. You can buy pullbacks. I'm not telling you what to do with your money. This is what I do with my money. What happened? We pulled back, went long. We went long in the morning, pulled back midday, and then what'd you do? You woke up higher on Monday. The morning of Friday or Thursday. All right? They're buying the dip. What'd you do? You pulled back, they bought the dip. Okay? These are the trends you need to know. All right? This was actually in my playbook right here. You had a down day. You you open just over the close, you pull back, okay? And you never close below the close, okay? You never close below it. So, like a lot of these things, you just, it comes with time. But no, see, I don't know if it's my charts or not, but it didn't, because I went over it here on the live with you guys that the S&P long this day, these 2 days, Thursday and Friday, was key. It was key. See, it did close. It closed the candle. You wicked. This is a shakeout. This is trying to shake people out short. All right, and this is a 3-minute candle. It closed just below it, but you held it and rallied. You held it and rallied. You had a down day. You pull back to the low. It doesn't break. Like, you don't continue down. And what'd you get? You got to rally all day long. You guys got to know these things. Know the time. What time was it? Around 10 o'clock, I'm sure. What time did it start? 9:54, roughly. 10 o'clock, okay? You guys need to have marked out. That's what this turquoise line, that's what that turquoise line is. I always have the low, close, and high. The open's not so important. You can put it there, but it's all on the close, the prior day's close, the prior day's low, and the prior day's high. And you trade it. If you're coming down and you're above yesterday's close, then that's your first target is what do we do at the close? What do we do at prior day's close? You break the close, okay, chances are we're going down to test the low of yesterday. All right? What do? Are you holding the low and it starts to find volume and start to work its way back up? Okay, then we're going to look for the close and see if we can't break that close to the upside. Trading is easy. It's not easy, but it's hard if you make it hard. You have to act like a computer. Monday through Friday, IvyLeagueTradingYouTube.com, 7:30 a.m., 4 p.m. We come up with our game plan in the morning. We say what we think. Well, I say what I think the market's going to do that day. I told you Friday that we were going to break 430. We broke it. We didn't close above it, but we closed right at 429.90 something. So same difference. Again, this is why I do this. Okay, I've been doing this for a long time. You have to act like a computer. Again, come join us. Like, share, and subscribe. You don't know who this could help. You really don't. You don't know who this could help. There could be somebody out there that could really use this information and guide them to it. All right. So again, what did I have here? I had Friday's close, Friday's low, Friday's high. All right. What did we do at the close yesterday or today? We just stuck it. You pretty much stuck it. Well, really what you did was this yellow line, we didn't stick the close, I'm sorry. This yellow line is pre-market lows, because I will usually take, it all depends on what happens. Like CPI tomorrow, I'm going to have VWAP in there, which is the pink line. So what happens is you need to know how to use your moving averages. These are all moving averages. A lot of people don't know they think they know what they are, but they don't use them properly. They don't, okay? There's a reason why sometimes I have pre-market up and other days I don't. There's a reason. All right, you can learn that. Come join us. So we stuck pre-market lows. All right, you pretty much stuck the open on futures. All right, you pretty much stuck where we opened at. And then you rallied to the end of the day. And what was this? This is what I told you guys about. Watch for positioning coming into the CPI number that should be one of our lowest technically. It may not be month over month, but year over year, we had a pretty high number last year. And it was just about peak CPI. So instinctively, unless prices have went up, which I don't think they have, they just went up and stayed the same. We should get a decent number tomorrow. It should be right in line, maybe a little under, maybe way under. And listen, they position themselves. Or it could come in a little high for some odd reason. I mean, a lot of your like oil, copper, all of your commodities are down too. It's not like your commodities are up at all-time highs either. So, you can use those things to help you. Like, okay, what did copper do this month? What did steel do? Like, you can look at those things and tell what kind of week you're going to have or what kind of number you're going to have. Like, where's oil at? Okay, that's not going to be obviously in the that's going to be in core. It's not going to be in the regular inflation because they exclude food and energy. But anyway, so I want to just focus. I just want to I just wanted to get that out to you guys, that you could have institutions called off sides, guys. And that means this rally isn't over by all means. All right, you get CPI, you have Powell, you have Michigan consumer data. This is OpEx week. There's a lot of money that's going to be worthless on Friday. A lot of money is just going to expire. Okay? The majority of OpExes have ended down. That doesn't mean that we're going to this time. It's just something like we've actually, the last few OpExes we've had, there's been like little volatility. And it's been because there's been another reason and something else to worry about. So again, I wanted to get that out. Okay, you guys need to know, if you guys keep hearing about recession this, recession that, and then you start hearing them talk, we're not going to have a recession, like it's time to get long. Well, there's more than one reason to get long. And if it's just about recession, you haven't had enough time for that yet to dictate whether we've had a soft landing or hard landing. All right, you could get, like I said, institutions caught off sides. Doesn't mean that we can't have a pullback. All right, doesn't mean we can't have a pullback. But again, if you start getting a whole, because they also have numbers that come out for retail. Like how much is retail buying? How much is retail selling? And usually when retail buying starts stepping in, they will shut this thing down. They will just short the hell out of it and close this market down and shake retail out, only to rally again. All right. So that's sentiment in a sense. All right. So you got to watch out. Now there's all these reasons to be long, but the fact of the matter is, if you try to ask somebody if they want to buy here, they're going to say no. And that's another reason why I think we can continue a little higher. You know, we're getting ready. We're just about getting ready to have a pause. And look at this volume here, guys, to start the rally. Look at that. All right. These are the signs that tell you what you need to make, like the decisions you should be making long term. Look at that, and look at this. Look at that volume. That's institutional buying. And what do we have here? This red line is the Fibonacci retracement. All right. It's my Fibonacci retracement from the COVID low. COVID low, because this is what we're trying to get out of. We're trying to get out of what they did during COVID. All the money that they put into this, from lowering interest rates to the liquidity they provided to the checks that they sent out. They're trying to take back COVID and get back to a normal state of complacency. So these are the type of signs you guys need to look for. Look at that volume, guys. You're talking about almost 200 million shares traded and bought that day. All right. So what is my plan? My plan is to watch CPI. It comes in good. I'm probably going to buy the dip. Where am I going to go to? I'm going to bring up the SPX because there's a lot going on. The reason I have not taken these lines off yet is because I think we revisit them. I thought about taking them off earlier, but I'm just going to hold off on it. All right, because you could get some. You have a war going on. You have banks that something could pop up, but I think the Fed's pretty much taking care of the banks. Now I have a lot of stuff I want to get into. We want to get into trades. I have a lesson on AMD. Again, I thank you guys for joining us. Like, share, and subscribe if you could. It's greatly appreciated. And if you guys have any questions you want to ask, throw them in the chat. So these were the levels I gave you guys. These were the levels I gave you. Yes, last night. All right. You want to have 3 to the upside and about 3 roughly to the downside. So you have an area. Look at that double bottom. And the market went the market went up so quick here, you couldn't even blink. All right. So this is the next range. All right. This is going to be your next range if we hold it. Now, again, we have CPI tomorrow. We don't know. We could just randomly get a weird number where it comes in extremely high for whatever reason. I don't think it's going to, but okay. If it does. Let's just say if it doesn't. Let's say we get a good reading and then Powell comes out and gives us another rate hike. And what if his demeanor is, pretty hawkish? That's going to bring us back down. All right, the market's pricing in cuts. I think the market's pricing in roughly about 2 cuts, about 50 basis points. That would be 225 basis point rate hikes. So if you guys don't know, understand what's going on here, again, I I have my Fibonacci up, so and you've just taken back the Fibonacci levels, okay? Or like you've regained them. And like I can show you real quick as far as you regained them. All right? Right here. You see how we held this 38.2 fib? Like we broke it. This is your 50%, this is the 50% retracement. And then bang, look at that. Look at that upside that they took advantage of. So we come up and we hold the 38.2. You find support at it. You rally to where? Where do we rally to? The 23.6 fib. We get our pullback. We retest the 38.2 fib. Boom. We have just not looked back since. We've not looked back since. So we come up to the 38.2 fib. And what do we have? We have a bit of resistance here. All right. You have a bit of resistance. We try to break up above it. It falls. It fails. It hangs on at this level. This was the pennant that I drew you guys out. All right. And what the pennant is where, like, I'll just draw the upside of it right here. Boom. There's your pennant. Okay. There's your pennant. And what it does is once it breaks out of the pennant, it will pull back to retest the downtrend of the pennant. Okay. It broke out. It pulls back. Boom. You get your buyers. And we have not looked back since. There is your 23.6 fib. Right here. Look at it. Look at it making a support right here. Look at that. I know it's a little hard to see on. It's the only thing I don't like about these Thinkorswim charts. Look how it made its support, guys. Look at that. It closed right on it. Right on it. Again, if you start doing these things and you start noticing resistance. Look at these tails here at it. You break it. You come down, make it support, and we've rallied. You've seen nothing but green candles. Okay? So that tells me that Fibonacci from the COVID low is on institutional monitors. JP Morgan, Goldman Sachs, all of them. Whether it be Fundstrat, whether it's Morgan Stanley, Chase, you know, they have their Fibonacci from the COVID low to the COVID high, and as it started playing out, it's working to a T. All right, so we've reclaimed it. Where do we think we get a pullback at? I honestly, you could just consolidate up here, just like you did here. All right, and kind of continue higher. We'll see. We got to get our numbers first. We got to get Powell. Like I'm not calling it like as it is. We get our numbers tomorrow. If we didn't have any data, I would say the chart's telling me to buy the dip. All right, so anytime we get a pullback into resistance, boom, you're a buyer. You catch it to the long side. It fails to break out. You have your stop loss. You minimize your risk, and that's basically all trading is. You have to think and act as much as a computer as you can. That is why there's so many. This is why there's like hardly no humans anymore on the desk. There's humans controlling the programs where they put in their buy and sell targets. That's about it because the computer has no emotion. You tell it what to do, it's going to do it. All right. IWM. So what happened today? Let's go over what happened today real quick. You had the regionals. The regionals got smacked again. That's not good for the IWM. The IWM did rally a little bit today, but it put in this indecision candle here. Again, do you see the you guys starting to see the like the base, like the stages that gets put in? All right, when I tell you like this would be the bottom end of it. This is the range. See how it sells off, buys up, pulls back, goes up, pulls back. You're a seller here, you're a buyer there. Now doing it for some people is hard. It's coming down. They psychologically can't go long with the stock going down. But your risk to reward, there's a whole thing on it. Join us, we'll teach you. I promise. I don't want to get into all that right now. But you want to look at it like that. Now, where's our next range? This is resistance. This has been resistance right here, guys. It looks like we're putting in a bull flag up here. All right. Looks like you're putting in, there's your pole, there's your flag. Maybe we get a bounce higher. But again, we have data. So if we break this level here, we break 186, look for 186 to, I'd say probably, not probably, but 186 to 192. That's going to be your new range. And it'll sit up there and it'll go up and it'll come down because it's going to hold it. And as long as it doesn't break, give it about a week, 2, 3. It's hard to say how long. You can't estimate how long I'd have to go look at the data, because I could look at the data and see what we have down the road as far as what's to come to tell me what the market might do. Because soon enough, you're going to be back into earnings before you know it. We still got a little while for that, but this will be your next range right here. All right. You can see the range right here. See how that's a range? See that W? And then you break out of it, put in a new range. It's a consolidation. That's what stocks do. They're either going up, down, or consolidating. All right. I'll actually leave that up there because there's a small range right there. From like I said, from 186. We'll call it 185, the psychological number. If you're able to break up above it, that's the number you want to close and hold above is 187. You break 187 and hold it. Look for more upside. Depending on what's going on that day, that week, you know. But look at this volume, guys. Look at the volume. They're picking it off on the lows because, again, institutional ownership is net short coming into the year. So where's the best deal that they think they have? IWM. Why is that? Because the IWM was still on its lows. All right, the IWM is still way down here. If I bring up the SPY, like we'll just go look at the SPY or the Qs. I'm going to bring up the Qs. We'll go to a one-day chart. And I will show you. These are the things you need to look for because this is risk to reward. Okay? Where's the meat? Where's the meat and potatoes? Where's like the best opportunity? Look at the Qs. You're not far off from all-time highs. This is all-time highs and you're down here. So this has a lot of room. So if the overall market's able to climb higher, the best opportunity technically is here. The IWM, you still have a ways to go. So if I were to match up the IWM with the Qs, the IWMs should be, we're going to say they should be up here right now. They should be right around that area. And they're not. That's where the Qs are. Off the first drop, bounce. First drop, bounce. All right. The Qs, the SPY, the Dow, they're all up here. The IWM is down here. Why? Because the regionals play a big part in the IWM. All right. But the IWM, again, tells a whole nother story. If the IWM cannot rally and the markets continue, then it'll probably be when the recession comes that when the rest of the market goes to the downside. Because I've been into this. What happened here? All right, what happened there? Look at the Qs. It makes a rally. What did the IWM do? The IWM was flat all year. It told you the risk. This is risk, guys. Look at that, flat. Okay, not the Qs, or not the SPY and not the Dow. Look, they were just continuing to the upside. Look at that. And it tried to break out because you got to think about the market as like a whole, like all the indices. You have ARK, IWM, Dow, SPY, Qs, and then you have equal weight. So if the whole market's moving up, but you have this whole big section down here that's not moving up with it, okay, that's divergence, okay, and there's a gap here where it can't hold the market up, and it's going to come down. So the IWM here tries to make the run again, and then it quickly rejected it into the bear market. All right, so you have that again. We have that going on right now. See how it's flat? It's kind of just putting in this range. If it is not able to climb out, and then look at the Qs. The Qs are rallying, and the IWM is still down at lows. So these are all just signs you need to be aware of. Doesn't mean you can't go long, but news could poke its head out at any time. So if you have a position going into overnight, make sure you're comfortable and not over your head, because you could wake up the next morning, and if you're in options, you can't get out pre-market. Okay? And I don't even know if you guys don't have anything set up for pre-market, you should. Not to say that you should. I can't say that. You do you. But there is opportunity there for me. So that's what I wanted to go over. I think you have a lot of institutions, and we could start to see this make a run for it. But is there regional bank issues that hold this thing down? Okay, biotechs. I was supposed to look at this today, and I didn't. IBB with their new drug, they got halted Friday. They didn't trade at all Friday, I don't think. See how they got halted to the upside? It's just flat. Okay. All right. So what do we got? I want to go over two things real quick. Do we have an asset bubble? Could we have an asset bubble? I'm going to show you guys some PE ratios that I think are really cool. This was on CNBC a little while back. So 1999 and 2000, the PE ratio of Cisco, 148.4. That's price to earnings. PE is price to earnings. 148 times earnings. AOL, you guys remember AOL? AOL was trading at a premium of 217.4 times earnings. Okay. Oracle, 152 times earnings. Yahoo, 623 times earnings. And you guys think 10 is a lot? 10 years down the road? Try doing 60 years down the road. You're paying a premium for future earnings into 60 years from now. That's crazy. Qualcomm, 166. Okay. Now let's go to 2023. I'm going to use Apple, 29.6. Amazon, 84 times earnings. Alphabet, 23.3 PE. Microsoft, 32.4 PE. Nvidia, 51.3. So, you guys tell me if we could or could not have some more upside. You know, that's just big tech, mega cap tech, whatever you want to call it. All right. I just thought that was really cool. You know, that on average, like the S&P, you would like to get it at like a 14 times earnings, 14 to 16. I think it's trading at like 22, maybe 22, like the low 20s it's trading at. So when it gets down to like 18 to 16 and starts getting its way into 14 times earnings, you're going to see a whole bunch of buying. And you saw that day on the reversal. I think it was October. That day where it sold off and put in that ridiculous candle right here, right there. That was at just under. It was like a 15 times earnings along with the Fibonacci. So you had like October 13th. That candle is insane. That candle literally from high to low, 348 to 367. That's so insane on the SPY. I think that's probably the closest 3%, over 3% day I've ever seen. I've never seen a day like that. It's insane. That's so insane. And I played it. I remember trading that. It put in a reverse head and shoulders down at the bottom. Boom. And it just went. And I couldn't believe it. I played it twice because I didn't know that it was going to rally so much because you had so much shorts. You had so many people being short from here. And then once this happened and that bounced in the way that it did, it caused all this money, all this sell money, and all the shorting that was in here and this, it caused them to cover. And you've seen it. And that thing, that's why it put in the candle like that. It's pretty crazy. All right, so let's go into a lesson. Let's talk about AMD. What does AMD have tomorrow? All right, real quick. Oracle had earnings. We'll cover that. AMD, they have an event tomorrow. The lesson I'm going to get into is about AMD. CRM Salesforce had their AI day today. It didn't go too well. I might be trading CRM tomorrow, but again, with CPI, I might just play the stocks that I may play something different because it's CPI and Powell and everything. But we'll go into that tomorrow. I'll give you guys my game plan tomorrow. Join us live, 7:30 a.m. to 4 p.m. Live right here, youtube.com, Ivy League Trading. Like, share, and subscribe if you could. Again, it could help somebody out that, may need it. We have a lot of information that we give out, a lot of trading ideas. We teach a lot of risk management here. At least this is what I do. There are so many other ways you can trade the market, You don't have to do it the way I do it. Maybe you do it your own way. As long as you're making money, keeping your losses small, knowing when to cut them. If you don't know when to cut them, give it time. Start small, take it slow, and in time you will get better. You get out what you put in. So first off, let's just go on to this. I want to go on a couple things real quick. Again, I thank you guys for joining us. What do we look at? So what did we notice today? Let's talk about the market today real quick. So we noticed the SPY and the VIX were going, or the SPY, the Qs, and everything were going up. Well, what did the VIX do? The VIX also went up. And I even got this question. Why is premium up? Premium was up. Well, the VIX is a measurement of premium. So whatever the options are, you could usually gauge it by the VIX. Let's just say, my example was, if you have a 30 handle in the VIX, if it's around $28, $30, your option for one contract's probably going to be around $280 to $300 on a daily, or like 2-3 days out, because now they have VIX daily, like, because they have dailies now. It used to be I think, like, it would be every first of the month there would be like a Monday, Wednesday, and then Friday, or it was like it was Monday, Wednesday, and Friday. Now it's Monday, Tuesday, Wednesday, Thursday, Friday that they have options for, and you can use that. You can sell them. There's so many ways to make money in the market. There's not just one specific way. So we had the VIX up today. The market was up today. Yields were up today. Like, everything was up. That shouldn't make sense. If yields are up, the market should be down. Okay? That's hindering earnings growth. All right? I said I was going to do a lesson on that, and I will get to it. So the VIX was up. The VIX actually gapped up. And usually, this is telling you how big tomorrow, Wednesday, Thursday, and Friday is. This is telling you how big the week is. With the VIX gapping up and rallying along with the market. All right. So the VIX is a measurement that measures the volatility of the S&P, which is technically the options contracts. So the VIX is telling you the options contracts are higher because there is an event that is going to take place that they're trying to price that movement in. Okay. If Powell cuts, where should we expect the market? Are we going to expect a 2% day, a 1% day, a 1.5% day? But we also have CPI, Powell, PPI, Michigan sentiment. You have European interest rates. So you could get this thing, option contract could go pretty high, because what it is the seller of the options, and you can sell them. You can either sell them or you can buy them. The seller has to price in and feel comfortable selling that options contract and not taking a loss. So they have to price in, where can I sell this to where I don't think I'll have to pay up. Let's just say the SPY is at $300 and he sells a $300 call at $1. Okay, and the SPY goes to 310. That means he owes, technically, the premium will be around $900, but that seller will have to come up with 100 shares, because one contract is worth 100 shares. He will have to come up with 100 contracts at $300 some, and then that person that has those contracts at 309, even though the SPY closes at 309, the person that owns the 300 calls is able to take those calls and sell it to the market at $300, even though the SPY is at 310. That's the purpose of options, and it's the same way for the downside. Okay, so that's how options work. Like, that's the point of it. And the point of options also is to be used as insurance. That's what they are. It's an insurance tool. You can become your own insurance agent right here in the market by selling calls or puts. You can sell insurance to long-term holders. Okay, so again, we had a rise in the VIX because we have so much data, we don't know what to expect. So they price in a higher premium. Like, you're paying in a higher premium because of the movement that is to be expected in the markets. It's telling you that the expected move here is about 1.5%, maybe 2%. All right. So we had the VIX. I've been watching TLT, guys, which is the 20-year Treasury. I told you guys day after day after day. 2 weeks ago, last week, I told you, we get to 100, you're a buyer. And we're not looking for this big move, okay? This is just a trade we're trading the range, all right? It gets down to hundreds, we pull the trigger, we take profits off 101, 102. Every dollar is $100. You buy 10 contracts. For every dollar, you get $100. That's $1,000 a contract. All right, depending on where you buy it. If you buy out of the money, you'll make a little more, a little less. But that's specific. That's the principle of how it works. If you buy in the money, you get $1. Depending on the volatility, again, you'll have to know the Greeks, which is, your delta, gamma, theta, all that good stuff. All right, but technically, you buy, if the stock is right here at 101, 101.13, you buy a 101 call, it goes to 102, you got $100. Okay, you got 10 contracts, 20 contracts, it's $2,000 or $1,000. All right, so Now again, that may change because why? Because the VIX is up. So you may pay a little more in premium, so it may not be $100 for a dollar. It may not be $100 for every dollar. It may be like 80, 75, 90. Okay, you'd have to do the math. We can teach you all this. I know the math. I can teach you the math so you know how much you'll make, when it gets to what price point, how much you'll lose if you stop out. So, again, we have big data tomorrow, guys. You just have to watch CPI. I don't want to go on a spiel too much about like trying to come up with like stocks. Like I do have a few stocks that are on my list. I'm going to be watching AMD. I'm going to be watching CRM, and I'm going to cover them right now. But I want to show you guys, keep your eyes out for the banks. Like we'll take a look. You guys need to take a look at this. And we always do at the start of the week. This is the world pretty much. Okay. What, like last week, 2 weeks ago, we looked at it. It was red on Monday. Like everything was red. And then Tuesday, it was like this maroon color. So you've seen the shift from this like bright red here. See this bright red where it's like 2%. And then you see the maroon, which is like coming, it's like starting to go green, but it's flat. Like right here, this 0.94%. Okay, which is damn near flat. Well, that's almost a percent, but I'm just trying to find something close. I don't think there is anything that's close other than maybe, see, like there you go, like there's 0.5% on this SSL. So we've seen the change from bright red to like a maroon color, shifting into green. So we seen the sentiment shifting to be long, and we were long. All right, look at TSM, guys. Semiconductors had a really good day today. Let's go to the S&P 500. So what was down? Again, what did I say? Regionals. Look at regionals, guys. Regionals had a tough day today. So you have a meeting. You had, what's his name from Bank of America, the CEO of Bank of America. I know his name. It's not Bob. I forget his name. They have a conference going on. You have a lot of these people are doing interviews on CNBC. And it was like every time they talked that the regionals went down. Okay, you can go back, you can YouTube CNBC and go through them all. You might learn something if you do. So we had CME down today, Salesforce, or no, that's the financials. I was thinking CRM. So again, you had financials down, and again, financials are heavily weighted into the IWM. Your energy stocks, they were trying to go green last week, like towards the end of the week, and now they are flipping back red. So you can start, if you start watching these things, you kind of know. And again, pretty much big tech, real estate, industrials, consumer cyclical, consumer defensive, not so well, but consumer cyclicals were pretty damn green. All right. Meta was up 2.3%. What we say last night? My guy knows. He was saying about how somebody was saying it was overextended. I'm like, maybe it is. I would say it is a little bit, but I think Meta still has more to go because it's still a good deal. Meta, honestly, is still trading at like, to the rest of the market, it's the best big tech cap name you can buy right now. Price to earnings. You're paying a big premium for Nvidia, Microsoft, Apple, Amazon. You're paying a much bigger premium for those than you are Meta because it had some downside it experienced. The market wasn't sure what was going to happen with it after they changed their name, changed their product, and it's proved itself, and now it's working its way back up to its original price. So we'll keep an eye on these tomorrow. Again, we had energy, utilities were down, oil and gas, E&Ps. So keep your eyes on that. Let's see where the so we have ETFs here. There was something else I was wanting to bring up. These are your ETFs. So if you guys ever want to look at ETFs, I brought up last night like your triple leverage, like your SOXXX, SOXX. I brought that up last night. So for every percent that the semiconductors ETF goes up, for every percent it goes up, this will go up 3%. And vice versa to the downside. If it goes down 1%, this will go down 3%. These are all different ways to manage your risk. Okay, if this is moving 3% for every percent that the ETF does, that means you can come in with a smaller size and still expect the same amount of opportunity. You can expect the same return as if you were to put on $100 instead putting on $25. $30, and you still get that same return as you would if you were playing $100 on the other ETF. And there's ways to hedge this. You put a little on this and a little on that one. You'd have won on both. You'd have hit both. I do a lot of hedging here. A lot of retail traders don't do hedging. And what's hedging? So let's say if we have a market, let's just say like the S&Ps are up, or let's just say the overall market's down. The NASDAQ, the S&P, and the Dow, we're kind of trending down. But we have a stock like, I'll just use like Netflix for an example. Let's say there's a news catalyst on Netflix, okay? And Netflix has been strong. It's got a price target. It just came out with news, so Netflix has been going up and the overall market's been going down. So what am I going to do? I'm going to go long Netflix. I'm going to buy the pullbacks. I'm not just going to go long randomly. I'm going to wait for a pullback. I'm going to get long, okay? So if the market's weak and I'm long a stock, so I'm fighting the trend of the market, what am I to do? How do I back this long up? Just in case this long, like if the downside gets worse or something happens, how do I protect that? I go to a weak stock. I'm just going to say Meta. Maybe there was some bad news on Meta or Intel. Let's just take Intel. Good news with AMD. So Intel's been a weak stock. I'm going to go short Intel and I'm long Netflix. And guess what? 80% of the time, they're both going to work out and I'm going to be green on both trades. Okay, but if the market really gets going, then I expect Intel to really get going on the downside. And maybe Netflix pullbacks. I hit my stop loss. I've lost a little bit, and I catch a big downside on Intel because that's the overall market trend. If the market's up, I'm going to get whatever the strongest stock is, whatever I feel the strongest stock is. It's going to have news, it's going to have earnings, whatever. And then what if I have a stock also that has just is underperforming the market? The overall market's going up. I'm going to be long a stock, and I'm going to be short whatever is weak. I got 2 trades on in 2 different directions. And usually, if you do it right, not usually, but if you do it right, you will capitalize on both. It's not guaranteed, but more times than not, you'll capitalize on both. But you need to know how to do it. You need to know what sector you're in versus the weighting of the S&P or the Qs. But usually, the overall market moves in a direction. The overall stocks are going to move in a direction. All right. You'll see I do that a lot. All right, so again, tomorrow, CPI and stuff, we have good data. This market goes up. I'm going to be long whatever's strong. All right, that looks like Meta. All right, what was strong today? Meta, AVGO. I'll look. I'll see if there's news. Broadcom, Meta, Amazon, Tesla. All right, I'm going to want to know Deere. All right, those are the things I want to be long. Lowe's. So PFE, there must be news here because the rest of the sector of that healthcare, of the rest of the drug manufacturers, were pretty much flat or red, but PFE is green. So there's divergence right there. So there must be news, an FDA approval, something's going on. So what I'm going to do tonight is I'm going to look and see what's going on with Pfizer, okay, and I'm going to get the overall markets up. I'm long Pfizer, or let's say I'm long AVGO. What's weak? The banks were weak today. So today I'm going to look at the regionals and say, all right, what's underperforming? The regionals. All right, so I got a short on the regionals and I'm long NVIDIA or AVGO or Taiwan Semiconductors. That stuff comes with experience though. All right. That's also risk management in a way. There's just so many ways to do this. Maybe I'm long one of these semiconductors and then I put a quarter on the inverse ETF, triple leveraged. So I put a small amount on the short side in case the long doesn't work. And maybe I get stopped out on the one, the long works out. Or if they start rolling over, I'm already short the triple leveraged ETF for the semiconductors. I pick up that long. It's, this stuff takes time, guys. I can teach you how to do it. Just join us again, like I said, 7:30 to 4 p.m. IvyLeagueTradingYouTube.com. If you're here, you know where to find us. Let's get into some trades. What are we looking for tomorrow? I'm going to watch CRM. I'm going to watch Oracle. Now look, Oracle is at all-time highs. There's no price action up here, so I don't have resistance. All I can do is go with look at this gap up. This could be, remember how Colin, my guy, how are you doing tonight? I hope everything's good. Great job today. You remember how you asked me, like, how do I know if a stock's overextended? That to me is about as overextended as you can get. Look at this RSI reading, 82. Look at the MACD. Like, this shit is jumping out of the charts on a gap up. Usually you'll get that. And I was trying to show you that yesterday when I was drawing it, but I didn't draw well. You'll get like a nice upside like you got right here. So you got a nice upside, and then it'll gap up. And then watch. Let's see tomorrow into Wednesday. We'll see if, if the overall market's strong, if this thing just sits here and is like flat or weak. It doesn't have to sell off, but it may be weak because this is what we call a blow off top. This is a blow off top right here. Picture perfect blow off top. You ever want it? You ever hear it? You can just look at Oracle right here. That's a blow off top. All right, it's been strong. It's made all-time highs, and then it just gaps up and it just goes. It's a gap and go, and then you put in that tail where there's a pullback. But I think with the earnings, it actually went even higher, especially off the earnings call, because Oracle said that Oracle beat on top and bottom end of their earnings today. And they also said on the earnings call that they had for their AI and their cloud services, they said that there was unprecedented demand for AI and cloud services. So it was a beat. It's at all-time highs. We'll have to see what it does tomorrow. All right, let's look at CRM. Let me change this real quick. So I'm going to watch CRM tomorrow. They had their AI day today. It kind of was a buy the rumor, sell the news. Okay, if you see here, this is a 2-day. This is Friday. This is today. This is where they had their AI event today, right here. And as you can see, as the event started, the market wasn't happy. And again, I had a storm, so I didn't know. I didn't even know that they were having an AI day today. Like, I didn't know they were having an event. Again, I did wake up late. You guys know it's been a lot going on in the family, and I appreciate you guys for bearing with us. So I was just wore out. It's been a week, But I'm going to get my sleep again. I got a little nap today. I'm going to get some sleep tonight. We're going to be ready to nail this market this week. Okay? I expect a few winning trades this week. I'm going to set the bar pretty high, and if I get close to that bar, it's going to be a great week. All right? I'm going to read. I'm going to react. I'm not going to think. I'm going to put it on my positions, have my stop loss. It works out. It works out. It doesn't. It doesn't. I'm going to move on. I'm going to hedge. I'm going to be long the strong stocks the week. I'm going to be short the weak stocks and long the strong ones. We're going to get it. And again, we've called this market to a T, thankfully. And I'm not always going to be right. I'm not always going to be right, but I have done a good job putting us on the right side of the market and in the right spot of the market, whether it's Chinese ADRs. It was BABA. We called BABA out early. TLT, I've tried to give you guys like small base hit trades, saying every time TLT gets to 100, you got to be long. And it's bounced off that $100 level. I don't expect it to keep doing that, though. So I think that's about over with. So CRM, I'm going to look at CRM. Okay, why do I want to see if it holds up, because I heard people talking about it going to the 100-day, which makes sense, or not the 100-day, the 50-day moving average. Okay, where's that? That's this red line right here, but you got to go to the daily to see what I'm talking about. Okay, this is your 200, 100, 50. These are all moving averages. This line here goes back 50 days. Okay, and this line is the closing price of the average price 50 days. Like, it takes 50 days and it gives you the average closing price. Okay, so the average closing price of the 50-day is right here at 202 for CRM. Same thing for the 100-day. The average price, the average closing price, 100 days. And then your longer term moving average, your 200-day. See how it bounces off of it? And these are tools that you can use as support resistance. See how this 9 EMA, see how it rides it, bounces off of it every single time, but broke it, got above it, held it, but broke it. It's not doing anything with it. Why is it not doing anything with it? Because it's consolidating. This is a trend. This moving averages here, this 9 EMA, this is a trend moving average. It's a short-term 9-day moving average. So if the stock's going up and down, it's just consolidating. It's not going down and it's not going up. It's not going to, you don't use it. You don't use it. It's not meant for that. And you can see that right there. It's sitting in the range. And then what happens? It breaks out. Boom, 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 boom. It breaks down. Now look, it's consolidating. We're going to see if it regains it right here and tries to go to the upside if the market goes to the upside. But we'll see. There is a nice tail right off of it on the daily. So if this level breaks, if this level tomorrow, see, we have to see where we open tomorrow. This is why it's like hard to give trades right now, because we don't know what CPI is going to do. All right. All I can do is go what the chart tells me to do. Let's go to the 15-minute. I have two ways. If this, then that. If that, then this. Right here has been resistance. And this is resistance for a couple days. Okay. But this was your range here. This is aftermarket. It's a little tough. So it's not too, I'm going to go with the levels that I have. I'm going to go with the levels that I have because they're there for a reason. So again, do we hold? So tomorrow when we come in, I'm going to have my closing price. You know, I'm going to have the close, the high, and the low, close, and high up. I want to see if CRM holds, and if it does hold, you know, I don't expect it to hold. Look at this volume. You know, it's hard to say what CRM is going to do. I want to see if we test this bottom side of 205. But again, if the market takes off, then it may not. It may just rally and then pull back later on. Okay? But as of now, it's stuck in this range right here. You just play the range, guys. If it's in the middle of the range, you don't do anything. It's in the middle of its range. All right? Where's the range? Right there. I just gave it to you. I'll color them if you guys want. Okay? We'll make them pink. See that pink line? This pink line? All right? So what do? We're long here and we're short there. That's it. That easy. If you were to put that in the computer, the computer, every time the stock gets here, it's going to short it. And you just put your stop loss. Put your stop loss wherever you feel it needs to be. Where's all-time high? Right there. So, you know, give it a little room right there. There's $22, $21.34. You're giving it 75 cents. That's your stop. So you're willing to lose 75 cents to make 221 to 205. So you've got a 20 to 0.75 risk to reward. You know what I mean? You're going to give this thing 75 cents to catch potentially a 220 rejection. Really, it's 221 and to possibly get 205. You know what I mean? So it's like $15 there. And we'll give we're going to give this $2 to all-time highs right here. All right, we'll give it to there. Oh, I have the circle on. So that's my game plan. My game plan is to be short here if it acts as resistance. But I'm going to watch it, you know. I don't just say I'm going to short here, do this and that. But yes, until this changes, I'm short here and I'm buying here. I'm long there until something changes. Or until I feel that like there's a catalyst or a reason for it to break that level. All right. I tell you right now, if it breaks this level here, this pink level, it's going to the 50-day. This is at 205. Let's go to the daily chart. Where's the 50-day at? Because that's what it's going to come in contact with if it breaks it. So you're looking at 205 to 202. So I would like put in a line here. And what also would happen? Do you guys know how to use the daily chart and know how to picture these moving averages moving in a manner that the stock does? So if this stock breaks this level here, okay, if it breaks this 50-day, now over to the right side of the screen, what's going to happen is this stock is going to come down, and this 50-day right here is also going to get pulled down. Okay, and what are you going to have? You're going to have an area of resistance, okay, which is right here. You have an area of resistance. You had a break. You retested it. Well, no, you have not retested it other than these two little tails here. So if this pink line breaks, it's going to send this 50-day down here at 200. So you have a psychological $200 level. You have resistance. Okay, this is where resistance was. Right here. Here. Come on. And there. And then it broke it. And what happens? When resistance is broken, it becomes what? It becomes support. And when support breaks, it becomes resistance. So, but what's really cool about this setup, though, is that you're going to have the 50-day, which will be down here. It'll flatten out and start to drop. Maybe it'll be a little bit above it, but it'll be right here. All right. When this stock comes down, it's going to pull that 50-day down. You're going to have your resistance, your 50-day, and the psychological 200-day moving average sitting there, or the psychological 200 price point sitting there. So expect a lot of buying here if it gets down here, because you're gonna hold this 50-day. Now, has it been holding the 50-day? It's been above it, but as we can see in the past, I mean, so it's consolidated. You see how it's flat and it doesn't use the 50-day or 9 EMA because it's trading sideways. There's no trend. So it breaks it, it pulls back to it just about and rallies. And it necessarily hasn't touched the 50-day yet. You know, what does it touch though? It does touch the 100-day. Look at that 100-day. That 100-day is a big support level. So what do we know by that? We know if this 205 breaks, we expect 200 to hold, and if 200 does not hold, it breaks 200. What we're going to look for is, oh my God, you got to be kidding. This is why I don't even want to say their name. They're letting me use they're not letting me use it, but if that 200 breaks, guys, then you can expect the 50-day to break, okay? And what's going to happen is, if this does not hold, the stock will come down, and it will bounce back to retest it. If the stock breaks it, it's going to pull back because it was support. The support broke, and we know if support breaks, it becomes resistance. Boom, to the 100-day. That is a nice trade if it sets up. And we'll see in the coming days, does this trade set up? But we're going to, first is first. First is this right here. If this $220 level cannot break on CPI, Powell not giving an interest rate, which is all good data. We get good data, no interest rate hike. And CRM cannot break that level. I'm going to tell you right now, I'm shorting this thing with everything I have. That is weakness. If you get a good CPI, Powell, and it does not break that level and go with the rest of the market to all-time highs, this is the basket of a stock that I'm going to short and put on a long for those reasons. Now, if it does break it, okay, it breaks it. I'll wait for the pullback just like I did here. You know, I'm going to wait for that pullback. It breaks it, okay, pulls back, makes it, because it's resistance. You can see these tails and up here. It breaks it, pulls back, boom, long. I'm long at that level now because now that resistance turned into support. And then I just look for my upside targets. Like, where am I going to take? I'm going to take profits throughout that run, but officially, like, what is my upside target? Like, where is it going to find resistance again? Could find resistance right here at this all-time high and not go anywhere. That would be my first. I would be taking profit right in front of that target. Right in front of there. And you have a gap fill here too, guys. Look at that. You see that? There's a gap fill. Of course, every time I have the circle on, it does that. It's so funny. Let me do this. Bada bing, bada boom. There we go. All right, so we do have a gap fill there. That's probably why I had that line there anyway. That's important. So it filled the gap and could not hold it. That's a story in and of itself. Look at that. It tried to fill the gap, and it's getting rejected at the gap. This was earnings. It had a gap down on earnings, if you don't know. So that's one trade. So let's get into the lesson real quick. It's not going to take long. Again, if you guys could like, share, and subscribe, it's greatly appreciated. If you guys have any questions, put them in the chat. So let's talk about AMD. All right, AMD tomorrow has their AI and tech day. All right. So like I do have like TSM, Adobe, and I do have some stocks and tickers that I have for trades and stuff. I'll go over that in the morning. We'll see what happens with this data tomorrow. Join us live 7:30 to 4 p.m. Eastern Standard Time, IvyLeagueTradingYouTube.com. And we're going to go over the game plan. We're going to go over the data. I'm going to have Powell live on here. We'll listen to him. I'll tell you guys what I think. You guys can tell me chat what you guys are reading from him. And you know, we all work together, and we're here to make some money. That's all it is. We're here to make some money. Bring home a nice steak dinner. So again, this is a nice trade on CRM. So I'm just reading the story, guys. It had resistance here. It broke it. You know, it's finding support. You have a nice little triple bottom here. But if it cannot close above this gap and the rest of the market goes, if we get good data, we have no interest rate hike, you can expect to be short this stock with whatever stock you want to be long. At least that's what I'm going to be doing. You do what you want. I can't tell you what to do. I'm not a financial advisor. But that is putting yourself on the right side of probability. All right? If it's too much for you and you're new, you know, just give it time. Join us during the day and ask any questions in chat, and I'll get to them as, you know, as I can. So we had AMD, guys. Let's talk about AMD. Is that AMD? It is. Okay. AMD had an event has an event tomorrow. So let's talk about this. Look at that RSI reading. Hot damn. Almost up to the 90s. All right, so AMD has an event tomorrow. How many of you guys knew that? Or if you traded, how many of you guys knew that? Probably not many. Maybe you did, maybe you didn't. Let's go to the 15-minute chart. All right, so today, AMD, it held, where did it roughly hold at? It put in a double bottom pretty much at yesterday's close, or yesterday's high. You see that turquoise line? See how it bounces right off of it? You know what I mean? Boom, double bottom, long. All right, so this is buy the rumor, sell the news. Okay, so tomorrow, there's an event. Okay, traders know this. So if you knew that AMD had an event tomorrow, you could have possibly been long this stock too, just leading up to, because what happens is there will be a premium that's baked into like the options price. And that's what this is. You're seeing people buy up these options in anticipation for tomorrow's, you know, whatever the release is for tomorrow. All right. So what that is if you knew AMD had an event tomorrow, you could say to yourself, I want to see if we start to not only rally with CPI, Powell, but AMD has an event. I wonder if I could get this run up into the news and then sell it, you know, whether it's at the close or if it gaps up tomorrow. So this is how this is what I really want to focus on now, whether you could do that or not, because you can learn from this and say, if this company has something really big coming out the next day, let me look for a trade maybe to the upside, buy the rumor, sell the news. That's what this is. Not necessarily because there's some stuff going on with it, but this is where that rally came from, along with the market. So if you were just regularly trading AMD, let's say if you were wanting to be short or something, if you were wanting a pullback, this is why what I'm trying to get at is if you put on a trade, okay, on any stock, let's say you're watching Adobe, you're watching AMD, you need to know if they have earnings, if they have an event, or if they have a price target upgrade or downgrade, because you could be long the stock. There were an analyst or two, Bank of America came out and said that they're going to lower the price target on AMD. I'm just going to make up a number, and where's it at now? 129, 130. They're going to say their price target for AMD is 110. All right, and you're going into the day, you're like, yo, look, we broke yesterday's high. We pulled back we opened above yesterday's high. I'm going to look for a pullback and a hold of yesterday's high to go long. But you didn't know that there was a price, an analyst had put a price target that lowered their price target on AMD, and you go long, and this stock doesn't bounce back off of the high. Now, this is a little messy. It's not necessarily off the high. Sometimes you'll see it stick it right to the T. But instead, you know, the stock just does this, you know. And you're like, wait, why is AMD going down? You know, and you're in a trade. Well, you didn't do your research. You didn't know that they had an event the next day. Or you didn't know that the analysts lowered their price target on AMD because Maybe there was some news. Maybe there was news that you didn't know about. Maybe they're having trouble at their factory and they got to shut things down. Or there's an event. Or, you know what I'm saying, guys? So anytime you guys just randomly think to get into a trade, and because this can happen and you're going to trade and trade and trade, and then one day it's going to hit you. And you're going to be like, wait, what's wrong? What's going on here? I had a nice setup. It broke resistance. It's coming back into resistance to make it support. And I didn't get that bounce back off of it. It broke it. Okay, well, you should have your stop loss in. You should know, you need to admit when you're wrong and you need to cut it. You make your losers like this and your winners like that. You let your winners run. You cut your losers as quick as you can. So this is why it's important to know, like, what's going on in that company. This is research. This is not only just knowing that, you need to know the ATR. Like, I've talked about that on here a lot. ATR is the average true range. Like, what's the average range of the stock during any given day? Does it move $3 from high to low? Is it $6 high to low? $10? Okay. And what about a move on a like high volatility day? Like, if it has news, does that regular $5 a day movement turn into like 12, 13? So you need to know those things. I do. I've been doing this for a while. Like, I know, like, Tesla, AMD, Nvidia, Apple, Microsoft. If there's a news catalyst and that thing's gonna go, I know roughly the dollar amounts. Now, there's stocks that I don't know, but I will look it up. I will go back in the morning. If I'm going to put on a trade on Adobe, Netflix, I know I'm going to get $10 from high to low. So if I'm expecting to be long and that thing pulls back $2, $3 onto support, I go long. I know I got about $8 left of upside, $7 of upside, roughly. Maybe that's the low from high to low or low to high. I get $10, then maybe I know I have at least, if it's $10, I know I'm able to grab at least $8. Or if I let the stock go pull in and I go long and it's already ran up about $2, $3, I know I have at least about $5, $6 left on that trade to the upside if it's going to go up. There are a lot of things that you need to know, like including that. You need to know what's going on with the stock, guys. So that's pretty much all. I really just wanted to touch in on the Fed and how the employment rate lags about a year from the pause, not from when they start. Okay, not from when they start. So you could give it 18 months to 2 years from when they start interest rates, roughly. And we're a year under our belt now, and I'm looking for another. I'm gonna say you're gonna. I honestly, my target is probably around fall, maybe late August, September, and October is when I start thinking we start seeing this unemployment tick up. Maybe it's later. Maybe it's not until January, February, March. So only time will tell with that, guys. Nobody knows anything, and again, things just randomly pop up in between these, like data points or whatever you want to call it. I had the word in my head. It's been a late day, long weekend. So yeah, let's see where futures are trading at real quick. If you guys have any tickers or anything you guys want to go over, you can put them in the chat, or if not, I'll probably call it a night because I want to get up early. So I just wanted to touch on that because you guys are going to see a lot of people talking about a soft landing, and it's to be expected, and that's sentiment. And you start getting everybody long trying to catch this move, then I would watch for a pullback because the institutional people know, like I said, this stuff is about 80% psychology. Like I say, there's ranges, like you're buying at the bottom, so the stock's pulling back. And for some reason, people can't grasp because the stock is going down, okay, that they can't go long on support, and they should. Oh, dude, no problem, man. I mean, let's go. You want me to give you guys a game plan? Like, honestly, this is real shit. How much do you expect the SPY to move? What is the most the SPY can move tomorrow on good data? All right, I know. At least if we get a big volatility day tomorrow, the SPY is going to give us at least 1.6 to 2% max upside. So from our close, if we open up where we close, where's 2%? We're going to put that. Now, our risk to reward is to the downside. Honestly, I didn't think about putting on any position, but I'm going to put this up for you real quick. Or if you guys want to go, you guys can go. Thank you so much for joining us. IvyLeagueTrading.com or IvyLeagueTradingYouTube.com. Again, we're live Monday through Friday, 7:30 a.m. to 4 p.m. And then we come on at night to do, to do our recap. So what I'm going to do is, real quick, if we get a good number, I have to look and see where futures are real quick because I feel like we've had some more upside. Let me bring up the 5-minute chart. I can do it on the 5-minute chart too. I don't have to go to the daily. So let's go to the 5-minute chart where futures trading. So they're sitting up here at highs. They're just sitting up here at highs. All right. So let's go to the SPY. And the SPY, like I said, at most, this stock is going to give us, on a big upside day, it's going to be about 1.65% to 2%. All right. So the most that I know is I know I can get about 2% out of this stock tomorrow if we go green. And that's at least, because if you get a big short squeeze, which I don't think you will, because the short squeeze has already happened the past, you've seen this rally that we had. That is part of it. And it's, like I told you guys, it's pricing it in. It's pricing in a cut or a pause, and it's pricing in good data. So what we're going to do is we're going to go and put this right here. That's the close. So we know if we are getting 2% on a good day, I'm going to take this, okay? I'm going to bring this up. Now I'm going to go, where's 2%? Where's 2%? Isn't that funny? Roughly 2% is right just about at my level. Okay, so I'm already on point. See, this tells me my levels are where they should be, okay? And you want to do that for the downside. Now, it all depends on where you open at tomorrow, all right? Because this thing may have trouble getting through 435. We might see 437 tomorrow. Where's the downside at? On a 2% day, if we open up where we closed, okay? That's going to be right about here. Look, again with the levels. So there's your range. Your downside target is going to be right here around 430. Your upside target is 435. Look, isn't that funny how that works, man? Where my levels already were. Isn't that funny? So this tells you right there that the market just priced in CPI already, and the movement might not happen until Powell. So if you go look at your options chain and it tells you, let's say, if you want to get a 435 call and it's charging you $5, okay, you are going to get that $5 movement. Well, it's at 433. Well, let's just say you get a 435 call and it's going to charge you $200, 20 cents a share times 100, or $2 a share times 100 is $200. It's going to charge you $2 a contract. So you're paying $2. Well, what's your break even on that? So you've paid the $2 premium. It gets to 235. You need 6-7 to break even because you paid $2. Now the premium is going to go up depending on your expiration. If it expires like the end of this week, if it's 2 weeks from now, 4 weeks from now, 5 weeks from now, so keep that in mind. You're going to know this level. All right. 435 to the upside, 430 to the downside. And then you can take the premiums. So what I also do is I take a picture of the open interest, the volume and stuff the night before. Okay. I also know, I'll look at those contracts and I want to know what is the high to low on those contracts. Let's say the market pulled back and the call contracts, the low of them is 10 cents and the high was $2. So I know on a pullback and I have time and I use the chart along with the high to low on those option prices. I know once it starts getting down to the low and we're coming into support, like right here, and the data's good and we got a pullback, I'm buying those options and I can expect, a good chunk of change left in those contracts. But you got to relate it to the chart. You got to, that kind of stuff, you need to know what you're doing. You need to know how to tie it into your support, resistance, and Like, are you going to get movement that day, or is it just going to consolidate and just stay flat? Are you going to get like a 50-cent movement, 75-cent movement, a dollar? I want at least like, if I'm playing the SPY, I want at least $3 to $8 movements, 3 to 6, and that's a lot. But once you start getting into like regular markets, like you see these candles, see those candles, how they're so small. If I just go back how far it'll let me, you're going to notice the liquidity crunch. Now this ain't going to take me back far, but what I can do is you can start to see the bull market, and I called this. All right, I called this stuff, guys. Look at the size of these candles comparison to the candles that we have now. Look at this candle. This candle is 405 to 414 high to low. Look at them. You got a bunch of them. $8 candle, $10. Look at these candles. Boom. Look at this. Boom. What do we get? Look at them. Look how small these are. Look at this. This is 410 to 412. That's a $2 candle compared to $10, $12 candles. This is liquidity getting drained. Now you're getting bigger candles here, but not that big, because you're getting people to go long because they feel like they were caught off sides, and everybody's trying to jump on the long side right now. But look at these candles. They're so small. You know what I mean? But they gradually started. They gradually started getting small right here. All right? Like, look at these candles, guys. Every day we were getting 10-point candles. The opportunity was amazing. Look at that candle. Like that one there. 428 high with a 407. 407 to 428. Could you imagine that? Could you imagine right now we were at 405 and then we went to 425 in one day? That's pretty crazy, huh? So that's all, man. So we'll go over it more in the morning. We're going to see what the data is. We're going to read the data. We're going to read and react. We're going to have our upside targets, downside targets, and everything in between. What stocks are in play, what news we wake up to, all that fun stuff, guys. Thank you guys so much for joining us tonight. If you guys don't have any questions, I'm going to call it a night. Thanks again for being here. Thank you guys so much. You guys have a great night. 7:30 in the morning, ivyleaguetradingyoutube.com. All right, guys, we will see you there. If you guys have any questions,